Then who's that?
Hey. Can you guys hear me? I'm having some internet problems right now.
I can hear
Yep.
you, yep.
Great. Is the sound quality okay? Usually I sound like I'm kind of coming to you from the past or from the moon or something, but is it better?
It sounds good.
Sounds good.
Excellent. Excellent day. What pattern is this? This is like the chicken or something, isn't it? Mr. Burns. This is the Mr. Burns.
Oh, the sell down works on the. That's on the 1 hour. Yeah, I was watching that yesterday. They were just selling into the longs. So that was, I think I might have posted something about that. It's just saying they keep selling the longs, and normally if you get that kind of thing, you'll get a spike up and then a dump down. So that sort of around 1400, around the start of the day through to about 6. See those candles in there? They just were selling it down,
Okay.
selling it down, selling it down. Just go to your left a little bit with your cursor. Yeah, there, right a bit.
Ah.
Yeah, everything's sort of past that first blue dip. So you had that go across to your right there. That blue candle that comes down, the bigger one to your right. Yeah, so then see all those 1 hour, the next series of 1 hour candles, they're sort of even more in that next series of candles. I think it was that next series I said they're selling down the 1 hour, and anyone that was longing, they were just offloading into those longs. And then
It's called selling the longs.
Yeah, they were selling into the longs. So really they're just offloading their positions and then into all those really super bullish people. And then they wick up, hit the resistance and roll down. So that's like if you know there's a resistance level, like there were all those resistance levels kind of 206 upwards, and yet price wasn't touching them. What it was doing was staying just below them, and everyone that was longing, really bullish, was just getting sold into. Once those bags were unpacked, then the price went up, hit the resistance, dumped down. That's absolute fuckery. Lovely to watch. Also, why you just TP at 205 and go get drunk on the couch.
So to conclude this one, to make sure I understand as the layman, this is when you see this type of thing, this is like people buying and buying, and then the bigger players are just selling their positions into this.
Correct. Yeah. And because of the buying pressure, like they were obviously in a bit of a hurry to unload because the buying pressure was actually pushing the candles down. So they were selling more, but enough to keep it moving up. So that keeps people buying. So the thing about like spotting that is first you need to know where are your rejection levels. So if you have all your rejection levels charted out, you know that they're gonna you got all these break levels, you've got various different origin levels, you had all sorts of stuff, just 205 through to 213. And so when you get close to that, it starts hovering underneath it. And that's just strange because we're hovering underneath resistance. We haven't touched it. Why would we be hovering underneath resistance? Because markets move around. See those break levels that are in there? You've got a little 3 candle range before the accumulation. There's another time frame.
It's
I think
going
2
all the way
day.
back to February.
Yeah. Chuck it on a 2 day. I think you'll find there's a 2 day break level in there. So the closes we had yesterday were 1 day and 2 day. So you see that 2 day break level? That one. So they're just hovering around the first touch of that break level, but they're not going to it. and they kind of should be going to it. And I think if you put a marker on that break level below, it's an origin level. So you got another 2-day break level just below.
From here?
That one? Yeah, that's an origin level. So why have they pushed through an origin level? And then you've got that 2-day break level as well that is more local on the screen, which you've kind of got the line almost at the top of. Like I think you had it at the top of the 1 day, but that's a 2-day. So they've pushed through an origin level on first touch rejection. That's never going to end well. They're hovering below, well, they've pushed through another break level. They're hovering. Oh no, they hadn't by that point. They'd pushed through the origin level. They were hovering below 2 break levels, both of which needed to have rejections. And then on the 1 hour, it starts going sideways, and they're selling down. They're selling down the candles. See that in between those 2 levels? Bingo, unloading. And then once they finished unloading, they spike up into the resistance kicks in, and it just dumps.
We get on Mr. Burns.
Did you guys want me to send an announcement really quick to let people know we're starting the stream, or?
Is this our official stream?
I don't think
Yes.
so, but is
Nice.
it?
We need a
People need to pay
sponsor.
me for these things. Yeah. Sponsored by people who closed their trade at 2:05.
For everyone who got into this long, how did you enter? Like, when it started to rocket to the upside, was it like intuition about trend following, or?
Yeah, it was the daily range trend that I entered on. So that
Okay,
was
cool.
with the first target at 179, which was the hold, and then it continued to move past that. So then you start looking for what's your next resistance, etc. And
Yeah, fair.
yeah, and then I exited 205, re-entered at 203 because it found support, and then targeted 210, took half off at 210, and then got stopped out at 203, just at entry. And then
Yeah, fair enough.
the rest is history. Now we wait for it to figure out what it's going to do today. It's spending too much time here. Like if this was a really bullish flush, they would have gone back up by now. They'd want to move the liquidity bands. So if you dump down, which it's a backside bounce, so it's probably going to come down to that front side. But if they wanted to really pump off, if they wanted to really pump off into the sunset, you don't sort of stay in this area too long because it lets people get back in. Doesn't look much like a V-shaped recovery, does it?
You think we might push up first and tap one of these levels and make that
yeah. There's got to be a reason why they left everything to. There's actually a level even in the high part of 210, like 210.9, I think, that they didn't go to. So there's got to be a reason why they didn't go and hit the levels between 210.9 and 213. No, chuck it on a 3-week.
3 week. That is. Let me just
Sounds
add
like
that
you
to
need.
my.
Sounds like you need more times.
Week. There we go.
Yeah, you just type 3W.
Oh yeah. I forgot about that.
See
Thanks.
that? See that hold level? That's a It's a little interesting thing sitting right there, only a couple of bucks up from where they went. So yeah, I don't think it's over. I think they might be just trying to get everyone buying the dip of the dip of the dip and then have another dip.
We have a break here.
Yeah, so we should go to 240s soon. But it's just a case of, does it get there sustainably or does it get there not sustainably? That 3-week period's only got about 10 days to go on it. So
Is it because we have this hold level and then the trend? I guess it makes it less likely for it to.
yeah, I mean there'll be an uptrend in there, which is probably going to be quite far down. You'd have to measure it from the bottom to find out exactly where it is, but fun watching you do this. You can just do this forever now. I'll retire.
It's where you'll see my trend drawing skills. Then this one isn't. We don't array that.
No, so now you
Then
run a new one from
we array up
there.
here.
Yep. And then start cycling that one through.
And this one?
No, so you run it from the one you just had it on. That was right. And then up to that first blue one. Yep. And then array it to the next, and then the next. Completely away from the body, yep. That's it. And then to the next. Cool. And then you can array from that one.
Now that we've come to here, do we go down a time frame to start the next array, or can we just go straight up?
No, you'd go straight up. Now, if you wanted to find a lower time frame from that trend, you would now go to a lower time frame to do it, because if you go down to that, so technically the 3-week arrays all the way down to that next candle, which is actually also a range trend. So that's a really strong support area wherever that price is right now. If price goes to that trend, it rockets, because it's the global, or it's an interior trend that's so old it might as well be a global, and it's a range trend. I think that trend is the one that gave me nightmares.
It's a range trend because it's a left behind level here.
Correct. Yeah, so you've got a range trend and a normal trend in real close proximity. And if you chuck them wrong candle, go back one. Oh no, sorry, that's the right candle, but that's the wrong candle. Yeah. No, reverse. Take it back to the last. Yeah, that's it. Now if you array this trend is a range trend and a normal trend. So it's technically both. Like if you take that to there, yeah.
Okay.
So some trends are both. So, but what's really interesting, chuck a vertical blue line on that first green candle after the trend anchor point. Go after the other anchor point, the newer one. Keep going.
This one here?
Yep. A green one. One more. Yeah. Have a look at that on a daily. See, we've never tested that trend. Yeah. So creation, no activation. So the thing that gets a little bit, the reason this particular trend gives me nightmares is that price moves between trends and holds. We've got a 3-week hold at 213, and we've got that trend now roughly, where is it sitting as of today? If you just sort of roughly cursor on it, 240s, 238, and it would take
Oh,
some
this one
time to
here?
get there, right? Yeah. So the trend down below is the blue trend that's not been tested since creation is about 238. We've got a hold level at 213. Now, when you create a structural move, there's two sides to it. There's the trend and the hold level, and then whichever one gets triggered first usually leads to the other. And that means that there is a very high chance that if that thing hits 213, it could come all the way back down to that blue trend at the bottom.
Because that's a high enough time frame hold to get a reaction
Yeah.
to send it back, attack the trend.
Yeah, and the trend was never actually tested from creation. So,
And does that mean we'll get a nice bounce off of it?
oh, you get a hell of a bounce off it, yeah. And the hold would have already been tested, so it'll go to the break, and the break would be like 240s. So it'll so that's one thing I'm looking at. The other thing I'm looking at is that if they can delay this for 10 days and they can open on the back side of that green trend you've drawn on there, sorry, open on the top side of that green trend, what you then might get is actually just a bounce between the back side of that trend and the hold. Because they don't just target support trends, they can target the backside of resistance trends. So you might just get a bounce between those two, which would be a very shallow retrace, more like the 180s. So it's really just comes down to timing more than anything else.
So if we, hypothetically, if we opened here at the hold, we'd more than likely make our way down to this trend.
Yep. Yeah, that hold would usually put
Yeah.
it. And because the candle is still an open candle for the next 10 days, the chances of it coming all the way to the bottom trend is very high. If we close the candle in the next 10 days above that green trend, then the scope of the move gets smaller. So it's still not a hard close trend. So it's really just probabilities. If it went and hit that thing now, the probability of it coming all the way down to that bottom trend is really high. And the reverse is also true. If it finds a reason,
candle, like just that one. So if it hits it now, there's a higher probability it goes down.
Comes all the way down. Yep. Because that, if you flick back to a 3-week, you'll notice you've got 10 days or whatever to go on it. So
because it's opened here. So it's basically just wicking up above the trend and then it's going to dump down.
Yeah. Yeah, what happens to a
candle.
candle if it wicks up through a trend and hits a hold level? It usually doesn't end well, right?
Yeah.
It's diving, but in reverse. So today we've got a 2-day close and we've got a 1-day close. So if you have a look at the 2-day and the 1-day timeframes and just see if there's any confluence roughly in line with that bottom trend on those timeframes. Are there any untouched hold levels down around the 1? Oh shit! Look at that. I can see it.
Around
Look at
the
that hold
blue
level.
trend.
Yeah, look at that hold level that roughly lines up with where the trend is sitting.
Not that one?
Yeah, that one.
Oh. Contested?
Yep. So you got one other one in between, which is untested. No, not that one. You might get a bounce off the wick of that, but you've got an origin level, which is the bottom of the previous break. Yeah, that one. So that's a 2-day target if you reject off the 2-day, and then you've got that origin level roughly 50% in between the two targets, which means you could break that. If you broke that, you'd have a really fast wick down to that bottom hold, and it may wick through that hold and go to that trend. So it's now you need is Putin and Trump to have a bitch fight, and
So this origin level, we've created it here.
Yep.
And we would expect, I mean, obviously this is a 2-day, but on a lower time frame, we'd expect perhaps some kind of bounce before it. It wouldn't just.
Yeah, 100%. It would bounce off that hold at about 169, and it could even spend time there at that hold. It would travel back to whatever the 2-day trend is, and then if it rejected off the trend, it would go to the break. I mean, you might get an early warning because the break for that range is sitting very close, because that green candle is actually the wick of the green candle is quite close to the hold. So you might get an early warning. It may go down, it may hit that anyway, and then bounce back up to fulfill the requirements of the hold. There's that shitty inverse wick there too, and there'll be a lower time frame origin at the bottom of that next green candle up. So if that, it could actually move quite quickly based on a lower time frame. Like, yeah, that candle, the bottom of that candle, the one you were just on, go to the right. Yeah, that one. So you see how the wick goes down below, it comes back up? So that candle will not just be a single candle. On a lower time frame, there'll be more than one candle in there. And because that wick has gone down and gone back up, it means there's already actually a lower time frame origin inside that area. You just got to find it. And so if it closes on some lower time frame below there, maybe try 12-hour. Yeah, there it is. Bottom of that doji.
Here.
Yeah. So it never had a distribution hard close. So you've already sort of got like these compounding origin levels on different time frames traveling down. So you can sort of see how like you get a 12-hour close between one, and then that sends it with volume down to the next level, and so on and so forth. So yeah. So it'd probably bounce off the 157, and then it would find something to send it back down, and yeah, or it just stays above that trend like it kind of is now, and maybe that trend keeps us, or the reverse side of that trend might keep us moving forward.
And if we fell down into here, we'd potentially be perhaps in some kind of squeeze or something if it couldn't get out of that.
Yeah. But it probably would get out of that, just because if you hit a hold level and then you travel to a trend, and remember you got two trends there. So one is the target, and the other one will bounce. So, and they're both in the same area. So if you travel to those trends, you've met the obligation of the hold level moving to the trend. The other trend then has an obligation to bounce to the next untested level. So where would the next untested level be on a 3-week time frame?
Break at the top.
Bingo. And that's how you forge a path to 240s. After getting everyone so shit scared and liquidated and stopped out at the 140s.
I like that setup.
Yeah, it'd be nice.
Based on what we've been going over here, does anyone have any questions? Is there anything that we've covered that you know, like people don't understand, or they'd like to go over again? Because now's the time to ask, as we have the master in the house. Yes, everyone's a genius and everyone gets it.
Hey guys, can you hear me?
Hey, yep.
Yep.
Does do break levels count as support and resistance, or just hold levels and the trends?
Break levels are support and resistance. They flip basically based on hard closes. So it's kind of like the final boss in a video game. It's if price gets through a hold level and it hits a break level can either reject and or support, depending on whether it's top or bottom. At which point it becomes an origin level, and then it becomes actually better support or resistance than that of a hold level. So yeah.
Okay, but only when it becomes the origin level, right?
Yeah, so by default, a hold level, as it's called, is meant to hold the price within the range. So it's, say for instance, that 3-week hold level at 213. It's meant to stop the price from going up above 244. So it can go anywhere between 213 and 244, which is why you can refine hold levels to lower timeframes. But once it hits, excuse me, once it hits 244, it's basically saying, I'm going to leave this range and I'm going to go higher. But that then gets reviewed by the price gods or whatever makes the price move. And they have the option of saying, actually, no, let's make this 244 into an origin level. So to do that, it would reject for, say, 6 weeks, so 2 3-week candles, and in distribution, in which case it becomes an origin level. The next time it goes up and hits that 244, it dumps big time. So that's the process around them.
Got it. Thanks, then.
Yeah. So the other thing that would happen is you'll find, so say they wanted to absolutely moon Sol, which could happen because let's face it, they can do whatever they want. In the next 10 days, they could extend that candle, that current candle, all the way up above 244, and then they could close the candle just above that break level, in which case it can bounce off the backside of that break level and just keep going up. So that's the completely bullish outcome. Or what they could do is stay around where we are now, open the next candle in 10 days' time, close in 3 weeks. It all kind of still fits into market cycle timing. Close in the next 3 weeks above the 244, and then just absolutely moon. If they want to create a blow off top, they'll pretty much do that without retesting the 244. So then they'll shoot up to whatever super high level they want to shoot up to, close the next 3-week candle, and then plummet back down to retest, or maybe give it another 3 weeks. Like if you look at some of the blow off tops that happen, they generally happen because they close over a break level. The next candle just continues up into the some higher level, and then maybe you get one more candle of accumulation as a hard close, and then down it dumps and it comes all the way back to the break level. It's like what Bitcoin just did actually yesterday.
So if the next candle opens above the trend
Mm-hmm.
and pushes up to the break, we would
Yeah,
then
so
either
see,
have the option of opening under the break or above it.
Yep.
If we open under, we could push
It's
down. If we
probably
open
very
above,
likely to reject.
push up.
Yeah, Yeah, and you've actually got another break level in there as well, which is kind of just hovering above now. You got those two blue candles there. So
Oh,
what's
yeah.
the top of those two blue candles?
Here.
Yeah, that's a break level. So you can see the last 3 week candle rejected off the break level, but because it didn't become accumulation, you've also got another range trend in there as well. Just saying, take it from the green to the green of the block of 4. Yeah, there you go. So that's also another retest point, like for support, because it could reject that 213 level and just bounce there. And that's more confluent with the weekly. The weekly is about 153, I think, 152, 153. So there you go, weekly hold untested. And the weekly hold untested is inside the monthly. And I think you'll find we're rejecting off the weekly trend as well if you actually map the weekly trend from the top. So
From up here.
yeah, run one from up there. I think you'll find it's rejecting the weekly. Yeah. So there's some more confluence. So you could be rejecting the weekly down to the 3 week. Down to the 3 week retest of the range trend, which has confluence with the 1 week hold level. And then so this could actually happen in reverse. You could retest the 3 week range trend and hold level and the 1 week hold level. Then you could bounce up to 213 as a target. Then you could close the candle at 213, come back to 187 or something above the 3 week trend, and then target the 244. Yeah, that's also possible. Why can't they just send
So
us the
do
script?
you when you're kind of looking at this stuff and analyzing these higher time frames, are you just kind of remembering what could happen, or are you actually like making like a roadmap of some of these things and saying, well, if this happens, I'll follow it, or is it just kind of
Most of it I just remember. It's I have a lot of tabs open, which I just leave open with various different time frames sitting on them. And the bulk of it I just remember. And the levels will all have a lot of confluence. So it's just on that weekly, come across to your left to that block of 4 range trend that roughly lines up with those 3 week trends. A bit more to your left, you can see down the bottom there, it's sort of the low. So you got green, blue, blue, green. Too far left. You were in the right spot
here?
before. Nah, go to the right. Go to the lowest point you can see on the chart right now without moving anything.
Oh, down here, where we were.
Yep. What range trend do you have in there? On the weekly?
Good question. We have one here, I believe.
Yep, correct. What did it retest after it ran into the high, into the hold and the break?
Did it retest after it went into? So it broke it. It hit this break level, and then
Yep.
came back
And then
down
what
to
did,
the trend and the range trend.
yeah. So see how like the 3 week trends and the 1 week trends all have confluence? Like the 3 week the 3 week normal trends and the 1 week range trends kind of all have confluence in that same area.
Mm.
Yeah. So like if you've got a trade on one time frame and you got to think like, okay, and there'll be someone else trading on a different time frame. And for all of these things to play out correctly, they need to all converge somewhere at price and time. And so that area is where you had your 1 week range trend as support for the rejection of, there was actually creation of range trends at the top, because you had that, so up and to the left, you've got a left behind hold level, which then was closed into by that quite solid looking green candle that went up into it. Then you had them unloading their positions, which is those doji ones. So they were your sort of, they were selling into the longs, right, and getting, basically unloading their bags. And then they dumped down to retest the lower range trend. And why do they retest the lower range trend? Well, the break level had already been retested, and there was no hold level. So what represents the horizontal level at that point is the range trend. So that was, that was one of those trades we took weeks ago, whereas it's like, yep, we'll go up to there. And then you sit there wondering, why haven't we dropped yet? Why haven't we dropped yet? And the cold hard truth of why haven't we dropped yet is they need to sell their positions out. And they can only sell their positions out because everyone's getting stupidly over bullish, and those wiki candles are them unloading.
Because we have confluence through time frames. Is that also why
Yeah.
EMAs work? Is it just because people are using them? And
Yeah, EMAs are just trend lines. They're just average trend lines. If you think about what they're doing, they're just an average measure of the candles over time, right? So, I suppose they.
we'd be looking for confluence between time frames to find like really key levels where something might happen.
Yeah. Yeah, so it's like if you were to look, well, now, so what we've already noticed is that we have some kind of range trend roughly lining up with a weekly hold. We're rejecting off a weekly trend. We have a range trend retest on the 3 week that lines up roughly with the weekly hold. We're bouncing off a weekly trend. We'll probably, or it's very possible we could come down to that weekly hold. If we do come down to that weekly hold, we hit a 3 week range trend. If we hit a 3 week range trend, we have a 3 week hold at 213. So this is the question of, does it go down and then up? The weekly could send it down, and then it hits a confluence area where you've got support not just on a weekly time frame but on a 3 week time frame, and you've got a target for the 3 week time frame sitting at a higher level. And so that would represent, a 50% pullback of the range roughly, and it would find support, and then it would bounce to a higher high in the ranging process. So that's just one possibility. And then what happens? Well, if it hits that, it all depends on timing. So if it hits it, say, more than 10 days from now, that means it's closed above its trend, normal downtrend. So then it rejects off the hold level to the backside of the normal downtrend, which would all look pretty normal. And then the normal downtrend backside goes, well, where do I take the price now? Because the hold level has already been tested. So, then I'll go to 244 because that's the, yeah. So it's, and if you just mentally visualize what that would look like, it just looks like what you've just seen, starting from down there at 95. Yeah, it's just more of that, right?
Guess we'd be arraying the trend as well, so something like that.
Yeah. And we haven't lost the weekly uptrend. Like from the bottom, we're still holding it. We haven't even lost the daily uptrend. We're arrayed up on the daily.
when you were studying this stuff, how long do you think that it took you, like, or maybe a better question is, what, aside from just kind of plotting, do you have a specific process that you sat at the charts to do? Did you set out like, this week I'm going to learn holds and breaks, I'm going to do this, or did you just come to the chart every day and keep putting on the levels and kind of
Yeah, pretty
plodding through
much.
it?
Practice makes perfect, right? You just I forever right click and go clear everything and then just redraw it, and then
Yeah.
and you try to, like, I really didn't look too much until the oddball timeframes until much after, but it was just, you start to wonder, like, why did that 2-day level create such a big reaction, and that other 2-day level created a very reasonable 2-day reaction? Like, I'd take a trade and make some money and then be like, geez, it's still going. Geez, it's still going. Wow, it's still going. You sit there and go, what did I miss? And why is this one so much, more severe than the last one, whether it be up or down? And then you start to realize that, well, there's confluence in these levels. So what's the biggest level that has confluence in that same price area? And then you go, oh yeah, shit, we just had it's like, bring up the 74-day chart.
My brain had to process that for a minute.
What do you think we just hit? Look at that. Where's your 2-candle range?
We've got this one here and this
Uh-huh.
one here.
Yep. So put lines on the break levels of those 2-candle ranges. The next one down, yeah.
Break here.
Yep. On the anchored on the, yep. Oh yeah, OCD. Yeah. And where's the other one?
One here.
Yep.
Oh yeah, look at that.
So that was a 2-day level to the cent, right? But for a 2-day level to drop the price, what did we drop? Down to 86? Pretty decent drop, eh? It went all the way down to about 86 to liquidate, I think, in a matter of 2 or 3 5-minute candles. Do you think a 2-day level sends price to 86 from 209 in a couple of 5-minute candles, or do you think a 74-day level does it?
Yes, the higher level, right?
Yeah, it just makes mincemeat. And they were preparing for it. If you go down and have a look at the 4-hour range, okay, have a look at all the hold levels in that 4-hour range. Tested, and
Yep.
then nothing more until the backside, right?
Am I drawing those right? Would it be from the wick?
Yeah.
It's from the body, right?
No, that's correct. Yeah, that's correct. What you've done there is right. So they tested one hold level. You've only got a single candle above that second hold level. I mean, it did bounce. You can see how you had that bounce between, that little bounce between the levels. So you could have scalped. That 202 to 204 level would have been just a scalp that you could have taken. And then you had no other levels until you got down to that 186.7. So it was just going to tank.
You didn't even have a break level on this time frame, right?
No.
I mean,
And not only had it,
lower time frame ranges.
yeah, and you notice they left behind that 4-hour range and had not retested the break level. So 186.7. It was just set up from the very beginning to be an absolute liquidity grab from once it hit one of those higher resistance levels. So here's a scary thing.
They push the price up.
Yep.
They test the hold here.
Yep.
It's small. I presume because this candle's smaller.
Small. It's only going to give a little bounce. Yeah.
The hold weaker.
Yep. Correct. And it doesn't really have a full range above it either. Like, It's only got one candle up above it, not a full range. So you've got really no on a 4-hour time frame. You've got no break level realistically because you've only got a one candle. So that's the other thing. Like when you look at that on a 4-hour time frame, there's no real break levels there. There's a couple of hold levels, no break levels. It's just going to go. Like, so it'll give us a little obligated bounce. People will go, sweet, I'm going to long this 202 level because it looks like the price is recovering. Yes. And down it goes. So you've just bounced off the backside range through an FVG on a 4-hour. The front side is down there in the 170s. So typically what happens is a backside range creates or moves a trend, which is why you should probably see some accumulation. We should see some accumulation around here. And then if we do, that will create the first downtrend on the 4-hour time frame. Then that downtrend will probably take the price lower, and then that front side level is the one that ideally is the one that should try and break that trend. So and you've hard closed.
That's what I was going to ask you actually. Does anyone have any questions on this? What we're doing? Is everyone following? You can type if you can type in the chat as well if you don't want to speak.
We're so the crowd is so silent all the time. No, this is great and it makes sense. You guys are doing a great job.
Do you have the break level on the backside? The range right on the far left.
I couldn't hear any of that.
Oh, sorry. On the far left, so we got that break level at the top of the wick.
Maybe you just sound like robotic. Maybe disconnect and come back. I'm not sure. Maybe I don't know how your internet connection is.
Maybe if there's not any questions immediately from the crowd, you guys could go over the live stream questions that are in the channel above.
Yeah, very good.
Actually,
So
I have a
1111,
question.
could you have a look for those?
Yeah, I haven't had a look yet. I do have a question though. This hard push down, it came after the news announcement today. Would you have expected the same reaction, but over a bit longer time period without the news? Like the news just kind of compresses time that the same move takes place. Is that safe to say?
Yeah, news is like a speed dial, really, because people will accept it. They accept the PPI or whatever. Was it PPI that came out badly?
It was jobless claims, I think. Yeah.
Oh, okay. So, yeah. So I mean, people are comfortable with the price dumping because there's some kind of reason that they can attach it to, and for those that lost, they go, shit. I got caught on the wrong side of that news, and so yeah. But it's like you'll notice that a lot of this news always comes out Thursday, Friday.
Yeah.
It's just typical market cycles, which people really need to wrap their heads around, is that most of the time what happens from close of markets, like say New York close on Friday through to Monday, most of that is all about just inducing people into trades in the wrong direction from where they really want to go. And then Tuesday through Thursday is normally about the real trend and taking out all those positions that were induced. And then it just rinse and repeat, starts again for the weekend. So it's news always seems to come out, and if the liquidity is there to grab, which it really was, there was just so many bullish longs. Like jump on X, and it's just people going, you're going to get 3 months of nothing but up now. Don't fuck it up, And it's
Yeah.
next minute dump. So, and like they can push through, particularly high time frame. They can push through resistance, but ultimately the candle has a certain amount of life, and by the time it gets towards the end of that lifetime, the price has usually reverted, and gone back to following the rules again.
Yeah, it makes sense.
Yeah, and everyone sort of blames, the market makers and Wintermute and all that kind of crap, but market makers make their money off effectively spread, right? So they will remove liquidity from markets before high risk times because they could end up on the wrong side of that. So that kind of compounds it. Like if their job is to maintain efficient markets and spread, and they know that there's a bad news or potentially bad news or good news event coming, because it could be either way, good or bad, they actually want to de-risk their exposure to the volatility of the spread. And so they'll actually take their liquidity away for some of those events. And then, of course, that makes it even more fun because the spread gets bigger, and that's why you see these bigger possible dumps. So it's funny. Everyone's like, they're doing it. It's not really. Partially, they're making it easier for it to happen because they are de-risking, but they're not doing it.
Yeah, we're the degens. We got to take responsibility for ourselves.
Yeah, well, it's mostly whales. It's people just like us with really big amounts of money that are just looking to open positions and close positions. And if you're dealing with really big sums of money, the only way you can efficiently open and close positions is into areas of liquidations or stop losses, because you need market orders to accept your buy or sell. So just business.
I'm just going through some of these questions. The one from 5 days ago is about origin levels, but I guess we've already kind of covered that in this. We've already kind of gone through that.
I put some in the chat too, if you want, Zach.
Oh yeah, nice. Oh my goodness. Yeah, these from the question page.
Yeah, exactly. Yeah.
I think we have some questions about range trends, but Sin made a fantastic video on YouTube. You can go and see that deals with trends and range trends. So I think probably that's the first stop for range trends. If you guys don't follow him on YouTube, it's definitely worth it. So yeah, how do we make sure we're always trading with the trend on each time frame?
A trend line. I know that might sound overly simplified, but that's pretty much what it is. You could use an MA, but you'll be getting in late and you'll be getting out late. Effectively, it's a trend line.
Is it safe to say, like, a lot of great trades though are really you're catching a reversal? Like, clearly, a lot of your entries are reversals. Is that safe to say, Will?
Yeah, well, you're looking at what can change the trend. So at the beginning, like when you're trading, you're trading with maybe an indicator, MAs, whatever, and you're in late, you're out late. All the numbers that you see on those indicators, those RIA numbers, those hundreds of percent or thousands of percent, they're all bullshit. Like if you actually look at it, it'll be talking about candle opens, not closes or whatever. And if you really took a trade on one signal and closed on the other signal, you'd probably find you lose. So initially, that's kind of how a lot of people start. They'll trade off an MA or an indicator or whatever. When you start to evolve, what you actually start to realize is that there's certain things in historic price that will create the future. And that's what you're looking for. You're going, well, and that's effectively what a hold level is, right? It's historic price action that when the price reaches it, it will have some form of reaction. And once you start to learn that history paints the future, you can get into the trade well before the quote unquote trend has even developed, or the indicator or the MA or whatever has said to get into the trade. You're in really early at the point of this is where it can reverse rather than it has reversed. So it takes so much of the risk out of it because you're just in really, really early. And there'll always be a minimum sort of amount, and they can fail. Like a hold level can fail, as we saw on one of those examples today on that 4 hour. You got a $2 bounce out of a hold level, and then you got a complete failure of that range. So that was like where it was 202 to 204. So let's just say you're trading with whatever you're trading with. Let's say you're trading with $100, and you put $100 in on that hold level, and it moves up $2, and you take $1 profit, and you move your stop loss to your entry, or you go, okay, well, what would I lose? I've taken $1 profit, so I'll move my stop loss to break even, where I'll lose the dollar that I put in, dollar that I've made, if it goes to XYZ level. So you move your stop loss, and then the question is, do you get continuation? And if you do get continuation, great, you've just entered before the trend has even changed. If you don't get continuation, you get stopped out, you've paid some fees, or if you put it at break even, you get stopped out, and if you put it at entry, you get stopped out and you still made your dollar. Like entering because you know where the future can change is something you'll never be able to really do properly using an indicator, and it's something you need to learn if you want to do leverage trading, because you can't do high leverage trading and enter after the trend has already changed. You've got to enter before.
Okay.
Yeah, nice.
If you're doing high
Well
leverage
said.
trading, you have to enter before.
Yeah.
Enter after the.
You need to see what the future can do, and then enter based on the conditions that can write the future. And that's sort of the concept of the backside versus the front side of a chart, because the backside of the range will create whatever is going to happen on the front side.
So, using this example again, we have our 4 hour hold level here.
Mm-hmm.
When price comes into it, if we wait for a bounce up to enter, and then we go in on high leverage here, this is too late. We should be entering at the hold.
Correct.
Because in this occasion, well, maybe it's
Like
whatever hold level that is.
There's two things you probably need to do with that. One, you need to put a fib on the hold candle, and the other one is you need to figure out where the actual 4 hour trend is, which you'd have to array from some really old higher level, I guess. But so if you look at it moved Where's the 1618? So it went higher than the 1618 because it worked all the way up to probably nearly 205 point something it went to.
205.9.
Yeah. So what you'd need to do is find the 4-hour trend, which would be running. You could put the just jump to the weekly chart. If we can lazily find it. Just put the weekly trend on there. It was from the top candle to the one that yeah, just keep going. It was not the current candle, but it was 2 back from it. Next one up, I think, was the
That's right.
weekly. Yeah, it's that.
That's right.
Okay, now go to the daily. Okay, there's nothing you can do there on the daily. Go to the 4-hour. Okay, cool. Array it from its pivot point back in the past. So, yep, so find its pivot point and now array it based on 4-hour structure. 1, yep, next one. Yeah, so that's still quite high. So something else stopped it. There must
Really?
be. No, it won't be a 1-hour that stopped it. Have a look back to the left. Was there a 4-hour break level or something that it didn't hard close? Ah, that. Put a. Yep. Okay. Check that out on
Now,
a lower time frame again.
is that a time frame break level? Because it's
No, it's not,
maybe
but it's still adhered to. It might even be back further. There could be like a 4-hour origin level even back further or something. It's wicked through something. What do you got in there? None of that. It's 4-hour. You can see all the resistance levels that exist in there, but I mean, the fact is some of those are even bigger levels. So there is a 4-hour there at about 90 something, but it's all done and dusted. So no, it's probably just that break level. It'd be a higher time frame break level. And so then if you view that on the lower time frame,
2 hour, 1 hour. What do you
yeah.
fancy?
Yeah, 1 hour's good. And so it enters the hold. Doesn't quite get there, does it? Yeah. So this is why you take profits at the 1618, as you generally speaking will always reach the 1618, unless the trend is in the way. And in this case, the 4-hour trend wasn't in the way. Something was in the way.
We came up to here.
No, because it's that blue down candle that entered it. From the looks of it, that one, yeah.
Yeah,
So
you're right.
it fell slightly short of the 205.8, which is something actually, to be honest, that is a sign of trying to trap. Like sometimes you just can never find why something rejected, and you can do your head in trying to figure it out, and then eventually what you realize is that the entire purpose of that move was to trap longs, so they just roll over early. It's a good thing because it means it goes back to correct itself at some point, but it was a 1-hour hold level.
This hold here? Would that have been enough to?
No, it shouldn't be enough to stop a 4-hour level. particularly because the 1 hour break level is slightly above that 4 hour level. So it could have gone almost to that, but not quite touched that. So it's not
And then
quite.
that creates a range trend anyway, at least on that
Yeah.
time frame.
See, it didn't even test the
Oh.
range trend, it just tanked.
Yeah. So we don't even get to the range trend here.
Nah. So there's definitely some really sort of trappy price action in there, which makes a
The
bit of sense if
15
they
minute.
wanted to bloody dump it.
Oh, we did open. Okay. Yeah.
There's also a 1 hour hold inside the 4 hour hold as well. So if you look at was it a 1 hour or are we lower?
This is back on
So
the
if
4.
yeah. So dial down from the 4, try the 1. That had already been tested. Go down to the 15. Yeah, that's all screwed. You can see you had that little 15-minute hold level that was tested and created the bounce prior to reaching the 4 hour. So you've got a little 15-minute hold just sitting slightly above the 4 hour line.
Is it the accumulation candle or a distribution?
Head off to the left. Head off to the left. See the engulfment on the 15-minute? Keep going left. Yeah, down. Down. Up. If you follow your 4 hour line, yeah, and then see your 202 line, 202.48.
Yeah.
Follow that one until you see an engulfed candle.
We have this engulfment here.
Yep,
This
keep
one
going.
here.
Next one
This
down.
one here.
Yes. Put a line on that. Okay, see the fractal nature of these things? So what did it bounce off before it bounced off the 4 hour?
That one.
The 15-minute.
Huh.
Yep. Chuck a 15-minute trend on there from that very top one up around 209. It'll be a real steep trend just between two candles. Nah, it'd be the one before.
Right at the top.
Yeah, it'd be that one to the one right next to it. Now array it to the one that broke above it. Yes, but also no. That was a sign of reversal coming. I remember posting that going, we've had our first 15-minute reversal structure. But take that one and move it forward, yeah, bingo. Now, entry to trend. Where's your 15-minute entry? Where's your trend? Yep. Bingo. That's how price works.
Hold is targeting the trend.
Bingo.
Because it's a 15-minute hold and it's a 15-minute trend.
Yep.
We hit the hold, come up to the trend, we
Yep.
reject, and then we come to our higher time frame level.
Yep. And then you go up and you break the trend.
So the hold
And then-
level on the 15 was always going to target the 15-minute trend. It's always
Correct.
like equal on the time frames. Okay, cool.
Yep. Which is why we don't really like the idea of hitting a 3-week hold level at 213 when the 3-week trend is sitting down at 140.
Yeah, interesting.
Let's just hope that they don't do it in the next 10 days.
This would have wrecked a few people.
Yeah, because they'd trade the trend break, right? But when you think about it, they open a candle on the trend break. What's the target for that trend break? It's already inside roughly the hold candle.
We're inside the
and
hold,
then move.
and then we've just got
Yeah,
the
and then
break.
and now array the trend to that break. Find your pivot point, move it forward. We move a trend, we break a trend, we move a trend, but where do we open? Under the trend. Yeah. So you can't break out of that. And this is why wicks, they mean so much. If there was no wick on the top of that green candle that broke the trend, it would move the trend and the candle would open on the top side of the trend, and then it could bounce off the trend and it could move up. But when the trend is moved with a wick, you're effectively shifting resistance to above price versus support being below price.
And what's really fascinating about this one is that they really moved the price up to get to do this.
Well, they're creating an origin level on a lower time frame between the wick of that 15-minute candle and the last candle. See how it wicked down below the wick of the previous 15-minute candle and then went up? So jump into a really low time frame and you'll find an origin level. And so then they broke the origin level to give speed to the dump. So it'll be something probably even lower than that. What's that, a 5-minute? Try a 3-minute. Try some weird number like an 8-minute. There you go. There was one back there, but that was a whole nother one.
I have one here that was created here.
Yeah.
That's the break
and
level.
another one just above it.
Origin.
There's another one just above it there as well, like kind of in the middle of those two. That's one because it never had a distribution hard close underneath it. So you can sort of tell from the structure of wicks to the previous candles that at a lower time frame there'll be levels that can increase the speed or momentum, and they just get created, and then it pushes up, and then it hits the resistance, and then it just goes absolutely full throttle down.
Is it right? I think in one of the videos you called the origins like a breakout level, because if we break it, we're really gonna.
Yeah, and they are so volatile that they don't necessarily have to close them. They don't have to retest them. They can just go. Like you poke your head above them or below them, and then the price just shoots. So they sort of have a compounding nature. So if you went down to something really low, like a 1 minute, or maybe even lower than 1 minute, you'd probably find that one exists right near the very bottom of everything. And so therefore, all it really needs is to close 1 minute at that point and then pop. So it's...
We have a 1 minute here.
Yeah.
And right,
I mean,
that would be a 1 minute.
Yep. Yeah,
There'll also be one up here, like you said on the. Is that one there? No, it's not.
Probably something even. There's one even lower than a 1 minute. There'd be one down a bit and to the left. See the wick down on the 1 minute candle with the green one behind it? So in there, there'd be something even lower than a 1 minute in there.
I think I have seconds. Let's see if I'm no. Too bored to have the seconds option. There is another question.
Yeah.
There's another question about the bias, and it's definitely something that used to confuse me. It's basically when you have an uptrend on a daily, but a downtrend on an hourly. The daily is stronger, therefore you should be long. It's like Yeah, if you're going up on one time frame and down on another,
Yep.
how are you making sense of that?
Well, you just trade on the time frame that you want to trade on effectively. But like if you've got a daily uptrend and you are taking an hourly trade, you should really be waiting for the daily uptrend to be at its low point, and then you should be looking for a 1 hour entry. Yeah, it's kind of, unless of course you're already in a 1 hour uptrend inside the daily uptrend, in which case you're just looking for the next ladder point of the daily. It's sorry, the next ladder point of the hourly.
I guess it's the
Like
idea
it just,
of like, is it a pullback or is it a reversal or is it a like what is
we'll say at the
on that
moment,
lower
just
time?
so right now on the daily, run your daily range trend from that range that's at the bottom there. So be down there, yeah. There you go. So the very, very first trade that came about on this was if you put a hold level on that green candle that's about 179. That next one down. That one,
Here?
yep. Oop, nope, nope. Reverse hold level, yep. Resistance, yep. That. Okay, so you create that engulfment. You open a candle above the trend. The price is going to bounce from the trend minimum back to that engulfment as a hold level. So that effectively was your very first, no, down further. Tiny, it's not a huge move, like it's only what, $4 or something. That was your very first trade. You took a trade on the daily uptrend and you targeted the first created hold level at 179. You took a TP at 179 and then you wait to see whether you get continuation to the upside based on the daily uptrend, or whether or not the hold level breaks the daily trend by pushing back down again and breaking the trend. So it didn't, right? Now, because it didn't, you look to your left and you go, where's my next daily target? And it would have been 205-ish probably. So look to the left there. Okay, so you had that break level at the top of that string of blue candles, and then you had that hold level that was not quite hit. Then you had that next break level. So you mark all these out. So yep. So there's one. That break level was slightly below that, and that hold level was never tested. Yeah, and then you got the break level there at 205. You'd already marked out, and there would have been the daily trend running through that same sort of area. So you would have had all of that stuff marked out. Your entry was on the daily trend down at 172. 174, somewhere around where your cursor is now, 173.
Mhm.
Your first TP, for the sake of guaranteed income, is at 179.9. Your next TP, when you got continuation, would have been 195, because it was, by that point, you were going up.
Mhm.
And then your next TP is 205.8. And then that's basically the extent of your daily trade. By that time, you should start to see a reversal, because you've gone inside a hold level, you've hit a break level. There's no harm in taking profits at 205.8, because a break level will typically always get retested. There was also the trend running through there at the same time. So there was various reasons why this is just a sensible level to be really off the table. Past that, you're probably not going to live a day past that. So that's your first trade. Now,
When you hit a break level, you typically try to go back to the trend. Is that right?
correct. And so that trend that we've got sitting in there now is the range trend. There will also be a normal trend, which will be slightly different to that range trend. which you'd need to array from previous dates to make sure it's accurate. So the price is now traveling somewhere. It's bounced off the backside of something. The front side is probably there at about 182. Is that whole candle 182, the one that's just above where you've got the hold line now? So if you can travel down, up a little bit, just shift that off there. Yeah. So just while we're there, notice that it's bounced off the wick, because the wick is the backside on a different time frame. Like it was a 4-hour backside, or it was a 12-hour, it was something. But that's why wicks bounce, because at a lower time frame they are something. But in this case, if we're talking daily moves, take that line and shove it down to the body of that candle. That's your sort of daily hold level on the underside.
The backside
So
gets a bounce, but it's not sustainable. It's the front
Yeah.
side that will try to move the trend.
yeah, the front side will try to break whatever trend will create. Well, the backside should create a trend, which is why it is possible we actually go up tomorrow before we go down. But at some point, price is going to come back to that sort of 182 level. It really should, and then it should give some kind of bounce. It would also be quite in line with it actually moving back to the trend again. And so you should always have a reason to be entering a trade, and it should be because you've found a hold, a break, or a trend. Now, those are the only real reasons you're ever going to open a trade. If you are in between a hold, a break, and a trend and something else, then you can open a swing position, but you just got to make sure you got the balls to see it go into drawdown, because it isn't just going to move in a straight line like it. Yeah, there you go, backside.
Just to be clear, just in case, because this was something that took me a little while to get, because we have a 2-candle range here.
Mm-hmm.
That gives us our hold level, which is the body of this candle.
Yep.
But the wick is also important, because on a lower time frame, that's actually a break level of another 2-candle range,
Bingo.
which is the backside of this move up.
Yeah, there'll also be, if you go to the left, there's probably something slightly higher up. It could be there. We go. Go put one on that other break level.
So,
Yep. And you can see how we got that little rejection off that break level. Go back even further and put one on the. Is there anything in there? No, not on that time frame. Scrub that. But slide back to the right again. Put one on the top of, slightly to the left, the top of that distribution string there. Yeah, that's an origin level.
yeah. Great.
So
2-candle range.
yeah, and you can see how the origin level would have broken whatever kind of uptrend was probably in play at the time. Like if you array the 12 hours, you'll find that probably broke the 12 hour and moved the 12 hour. So it'll be something.
When we want to draw the 12-hour trend for this area, we still have to go back from the weekly and the daily to make sure we're starting on the right place.
Yeah, you should, but at the same time, it's you can kind of tell from that candle structure it'll be the bottom one, because 12-hour support is normally going to exist for blue one.
Oh yeah, sorry.
12-hour support's usually going to exist underneath daily support. Think of it like layers of strength. So you see how the 12-hour sort of runs parallel under the daily? So that's typical. You'll find that. So then we close today and you array, or actually, sorry, rewinding. When you hit that origin level, you notice it broke that trend and moved that trend further down. So the one you just put in there.
Yep. So that broke it to there.
Yep. And then you see how the origin level broke the trend, and then you got to array it down. You got a really small wick on the bottom. Because you got a really small wick on the bottom, the next candle opens under the trend. It can bounce off the hold level, the backside of the trend, and it can keep going down. So then the trend moves again. This one, it opens above the trend, in which case you can bounce off the trend. And it powered through that break level because you were also bouncing off a daily level.
We had that confluence running through here.
Yeah. So, and now you're going to get another array on the 12-hour. So you look to see, how is my candle going to open? So what you're looking for daily close is you're looking for that to be up a little bit. Because if that candle closes up a little bit with enough wick on the bottom, then it can create a move between the trend and the hold, which is the next scalp. And that adds a little bit of confluence to what the thoughts would be around the daily, because you almost want the daily, because there's been a bounce off the backside of a range, you actually want to create the downtrend. And so the backside of the range's job is to create the trend to later be broken by the front side. So we should really shift up a bit, open, bounce off the trend, go back to the hold, maybe even close there. People get bullish again, and then they come in with their longs, too late, and then they get nuked. Let's see how that plays out. So the bearish scenario is the candle goes down. It ends up with very small wick on the bottom. It closes, and then the next one opens on the other side of it, and then you just keep traveling towards the daily trend / daily hold.
So we have our, when we look at this move, which is the 12-hour, is it better to find a time frame that just has it as a 2-candle range to start off with, or is something like this okay?
No, I mean, when you see 4 candles like that, you know that you're dealing with a bigger time frame. You should always be trying to deal with the pure time frames rather than fractals.
So our two candle range here, that's backside, and then that's the front side.
Yep.
The front side here is trying to get through this trend, or
correct. Well,
yeah.
it's trying to position itself in a position to lose the trend. You'd have to check.
So ideally,
if that is uptrend.
it wants to push down as low as possible.
Sort of. It wants to create a hold level, which is why it wants to engulf the candle above. So it's looking ahead and it's going, well, if I want to break the trend that I'm going to create, then I really need a hold level. That helps to break the trend. So closing in the position it's in now is really bad for the daily, because if it closed right now here this second, the candle opens on the wrong side of the trend with a hold level above it. Even if it went up and hit that hold level, it's got no support. So
under the trend, hit the hold.
Yeah, and
now
go down.
Double the resistance.
And the hold is going to target the trend, which is now the lower trend. So yeah.
So the front side is trying to push down under the resistance candle to activate that hold level.
To create a hold level whilst holding a position that means it opens on the wrong side of that trend, so that a push up would be into resistance and then down to trend. Yeah, that's
break the trend. Ah, lovely.
Yep. So then you think to yourself, well, then how does it push up? Well, the only way it can push up is that if there is a lower time frame where it's opening above the trend enough to push up. And so this is the fractal nature of price and how it all works together. The 12-hour might look a little different, or it could be the 4-hour or something like that. So the 12 hour or the 4 hour might also be creating a trend, but it's opening with enough of a gap between the trend and the candle to then push up to the hold. That could push up to that backside. Maybe not. 1 hour, 2 hour, maybe 2 hour.
Like to fall through that.
Some kind of untested range up there. Now there you go, 2 hour break level. See if it really wants to go down, it'll close under that 2 hour break level. Here's another 2 hour break level in there as well. It hates life.
Yeah.
Yeah. There's a 113-day trend coming through there as well. Same.
So essentially, on this lower time frame, it would want to try and create some structure to like
Yeah, on the
some
lower time
accumulation
frame, you'd sort
candles
of
here.
you'd expect on the lower time frame for it to create some kind of structure to have a little bit of a move up after the daily close, whilst having daily structure that actually creates resistance to then reject it back in the other direction. So that would sort of be the typical thing. So, and that's kind of why, like, you've got to look at the trades as the time frames that you're on, because you might go long on the 4 hour, but then expect to go short on the daily.
Because the daily's coming down, 4 hours,
Yeah,
the pullbacks, can go long on it before the continuation.
bingo. I think I wrote a drunken tweet last night that basically said something like, the best thing you can do is find the greediest entry on the highest time frame and ride it to the target whilst entertaining yourself with all the scalps in between. Yeah, and that's kind of what it is. You're looking for that really high time frame move. Where's it going? That's your bias. You open a swing trade on that, and then all the lower time frame stuff in between that's just noise. You scalp it and keep yourself entertained. Yes,
So
great
you're
drawing.
looking to
That's it.
take advantage
That's it.
of something like that.
Yep.
And
Yeah, we're
because you
dumb.
have your higher time frame levels,
Yep.
you can position yourself, and then you just do the same thing fractally while keeping in mind where the higher time frame levels are.
Yep.
Well, it sounds so simple. Why have I not done this already?
They don't want to teach you how it works. You might win.
Yes, I hope everyone is following. If we have, I don't know, how long have we been? We've been already going for about an hour and a half. So if you
I probably need to.
want to
Jump
jump
off and record a video.
yeah, this has been maybe about an hour and a half of these sessions is pretty good. This is going to be a really good one for people to go back and study and look at the examples if my drawings aren't too bad.
No, they're good. They're good.
Nice, Mr. 1111. Do you want to jump in with something to finish? Anything that's on your mind, or if anyone has a quick question or something, we can quickly.
Yeah, there's a lot of questions. I guess maybe we can revisit them next time.
Yeah, we can.
This was
come back
really
to next
excellent.
week.
I mean, these videos are absolutely solid gold. I really appreciate it, guys. Yeah. I'll be
Yeah,
looking
well,
for
we're
this
lucky to
daily
have that.
close to see if I will stay in my short, I guess.
It's looking pretty nasty at this stage. Rejecting off that 3 week is pretty big. Got 10 days to go. And it looks like Just chuck 113 day up.
As you do. There we go.
Yeah,
Yeah.
113. That's my favorite.
Fluctuate
Actually, I'm
ever
always
long.
looking at that one.
That's my favorite time frame for today. That's not a range trend in there because one of those isn't a 113-day candle, but it is a potential hold level. So if you just chuck a fib on that,
Yes. So this one.
yeah. So that's the kind of thing that, and just notice that the break, or what you would sort of think is the break level, if you go all the way across to the left, I suppose it's the very top of that string of, yeah, all sort of confluent. There's just all this confluence about why we're rejecting from that level. So that's kind of good and bad, really. Like, you want to be very, very conscious right now that that's a really high time frame rejecting from a break level. Could go quite low, or it could hold its trend. So if you chuck a trend on that from the bottom candle, there's only really one trend you can put on there, and then just flick to a daily. See where we are? We're just down underneath that. Yeah. Not a great place to be, really. You've hit a really high time frame break level from the wrong side of support.
Yeah.
Definitely, definitely doesn't bode well for potential falls. We shall see. And yet, the other side of that is that it's just hovering on being able to create a hold level. And if it creates a hold level, it can attack that trend and get back above it. So it's just right there on that line.
Then back to the 113 day, which the new one opens tomorrow.
Yeah.
If we can push up a bit higher and close here, we're going to activate this old candle or the support candle and the fib trade.
In which case you would actually be, you would be below your, sorry, if it pushes up to there, I think you'll find you'll be above your trend and create a hold. And then you've already tested that 204 level, so it can go up. So it's just a very precarious place for it to be sitting.
And then the new one opens tomorrow, so it opens in a few hours.
Yeah.
We basically need now this.
You have to rock it.
You really do kind of want that little pump just before the end of the day. It would be ideal.
So the bull runs over. Oh.
Well, not really. I mean, it just
twice.
all it sort of says is that all the lower time frames can then just keep pushing the price up to the moon. But it probably means that the bull run is over somewhere in the next 113 days. Because if it starts from the wrong side of resistance, it doesn't matter whether it pumps to the sky. What happens in a couple of candles' time is it will have to come back, right? So, I mean, we've been through this break level before, and we got to 295.
If we open here,
yeah,
opening under the trend, under the break level, we can rock it up here for the next month.
You could spend 113 days going up. You can even open another 113-day candle, hard close it. But what happens when you hard close it? You retest the break.
Yeah.
So you could be at 500. Like honestly, you could go to 500 and then hard close that candle in 226 days and then come back to 200. That's about a
Yeah,
50%
down.
pullback, isn't it?
Which makes sense, right? I mean, that would be, in terms of the bull run, if you look at the last cycle, that would probably be, I mean, you hit the top and then you drop down well within that amount of time.
Yeah. So it's all very possible from the positioning of that candle today. How does that candle, position? So you kind of want it to be above that trend, and you want it to be above that hold level, and it's still going to be below the break level, so it's still got the chance of being game over. But yeah, it's that last
Okay,
final
everybody,
push that
positive thoughts.
yeah
Positive
yeah
thoughts.
we'll just we'll get that last final push. The moral of the story is that if you actually get an entry below here, even if it goes parabolic and goes off into some big moon, you're still entered at such a good place that it's not going to matter.
Positive thoughts go both ways. You can long and short, right? So
Yeah.
whatever.
And I mean,
I'm
you've
with
got an
Blue. I'm a
uptrend.
bear.
You probably can't. Yeah, trends, I don't know. It's hard to do trends on time frames like this, but you could say relatively that there would be some kind of trend between the tops of those two green candles that we've had recently, sort of facing upwards.
Is this also a range trend across here, or is that so far away that it's?
Nah, it's not really a range trend because it's not a proper hold level.
Oh yeah.
It is a trend, and you're going to close above that. So, like, if you draw that back on, like, where is your actual trend on that? No, it's all the way at the top. It's there. So that would be your target. If you break that break level, you're going to target that. It's at 268. So if you can get up above the break level, then that's a pretty fair target.
Okay.
Right.
Well,
I better go.
then yeah, thank you so much for joining us. This has just been wonderful.
No worries.
Yeah, thanks a
We're
lot,
super
man.
grateful.
All right. Catch you later. Bye.
Thanks. Bye.
Thanks. Bye.
Okay, guys. We will be back on next week, Thursday. This will be recorded, so at some point this will be posted in the in one of the in one of the knowledge, I think it is, one of the knowledge
Yeah,
links or the video and tweet. Is that right?
I posted then. Yeah.
Yeah, so I would suggest everyone to go and rewatch some of this with Sin explaining his magic, and follow his YouTube channel if you haven't already. And let's pray for some kind of huge pump in the next 3 hours.
Yeah. Thanks for taking care. Sorry I was delayed today. Couldn't join earlier. So yeah. Thanks for handling, and hear each other next week, latest, or
Yes.
in the chat.
Yeah, Blue, thanks for all your work and posting all the links and everything. Appreciate that.
Sure. Thanks for recording. Have a good one.
Okay, guys, thank you so much.
Bye.
All right. Ciao, everyone.
Bye bye.